Thanks for tuning into this earnings conversation with L&T Technology Services. They come out with a quarter which surpassed estimates on most counts. Analysts who track the company have sounded off the positive bugle. Post that, let's get the management in to talk about how they saw the quarter go by, how they envisage the next quarter, the next few quarters going ahead. Indeed, the next year, which is a post-COVID year of sorts, or a with COVID year of sorts. Amit Chadha joins in right now to talk about his thoughts. Amit, good having you. Thanks for joining in. Hope all is safe with you.
Absolutely. Thank you so much and good morning to you.
Yeah, thank you so much. Good evening to you, as I understand. Let's talk about the quarter. You would be happy that that all the 5 industry segments for you grew sequentially, with 3 of the segments recording a growth of 5% plus. Tell us a bit about how this was done, and could this momentum continue, spill over, extend itself into the next quarter and the quarters ahead?
Perfect. So thank you so much. First of all, it's been a lot of work done by the entire team, our employees, a lot of confidence from our customers and wishes from our stakeholders, patience, if I may. We've all seen, a bad result in quarter 1, but since then we've expanded from there. Quarter 2 was okay. Quarter 3, we've grown 6.8% sequential. From a revenue standpoint, margins have gone up. And like you said, the growth has been broad-based. Now, there are 2 or 3 reasons that have made this happen. Number 1 is that we have been running a large deals engine for about 2 years now, and we refreshed our efforts about 3 quarters ago to make sure that we continue this journey as well as expand. So happy to share that our order book in this last quarter alone has been more than double of quarter 2, right? And that's been driven by $100 million deal, 2 $15+ million deals, and 7 deals that were in excess of $10 million of TCV. The second thing we've seen very clearly is that digital engineering, which was talked about in presentations and concept papers, has finally making its way to discrete manufacturing plants, to products, as well as process manufacturing plants. There is a lot of absenteeism happening on the shop floor, number 1. Number 2, there is a lot of remote working happening. And third, there is a lot of products that are being now managed remotely, because of which the digital era has just come all of a sudden, right? I mean, people have really started using it, imbibing it, etc. And we've seen work for us expand. Our digital revenues now stand at 49% of our revenues, total revenues. And we see that increasing as we move forward. And that's been the second reason for us, for our expansion. The third has been a couple of projects that we were expecting to start for us earlier had got delayed and therefore got started last quarter. And that's how we've seen the expansion. You asked me the question of going forward. So Niraj, our going forward plan, as we've announced on our earnings call, has been that our quarter 4 results should be as good or better than quarter 4 FY20, right? And beyond there into FY22, we are not providing guidance at this stage, but we are optimistic about our prospects in FY22 and beyond.
I must tell you, people believe you are being conservative when you're talking about quarter 4 the way you are. Are you?
So let's be a little. So what's baked into this, I'll tell you, and what's not. Niraj, as you are aware that Europe has gone in for a lockdown till mid-Feb because of the infections going up, and so has Japan, right? The US, there is no lockdown, and hopefully with the new administration coming in and whatever they decide to do for the country, I do believe that the infections will start coming down, etc. So we are a little cautious about what we're seeing in Europe in decision-making, not projects getting cancelled, but decision-making getting slightly delayed, and therefore we've given the result, the expectation based on that, or guidance.
I think that's a fair bit of caution as well. Just one quick follow-up on your first answer, Amit. The way you are making it sound about digital engineering, finally making it to the shop floor, would you reckon that this could actually be a start of a trend which will only snowball into something much bigger? Would that be a fair assessment?
So let me. I'm an engineer, so let me share some numbers with you. Zinnov came out with a report in Feb 2020, and what they said was in that report, very nicely, they put up and said that total engineering ER&D spend today in 2019 was $1.4 trillion. They expect that to go up to $2.2 trillion by 2025. This was, of course, pre-COVID, but that's the projections. They also said of the $1.4 trillion or $35 trillion in 2019, $400 billion was digital engineering. They expect that to expand to $1.15 trillion by 2025. So they expect a CAGR of 19%. These are industry reports, Zinov, and we've not seen anything to the contrary so far. So we do expect that our own digital revenues that stand at 49% today should expand to about 60% of volume in the next few years.
That's good going. Okay, talk about the deal wins. What's the nature of the deal wins? You have got some sizable ones. You've got a number of not small size, but mid-sized ones deals as well. 7 of them, I believe, excess of $10 million. Tell us what's the nature of these wins, where are they coming from, and what's the chances of this recurring in quarter 4 itself in light of the fact that Europe might be patchy?
So number one, we've got the kind of deals we've got. So we've got, and this is part of our investor report as well. But so one was a marine company that gave us a deal to provide an entire hardware software solution to do predictive analytics on their engines. Right, that was one. The second one was a strategic global engineering framework agreement that we signed with a medical company. And it's a current customer. But with the win, we expect that to accelerate in terms of their spend with us to do transformation of their products, which may not necessarily be digital, but in the entire engineering scope, right? So number 2. Number 3, with the 2 different industrial companies, we've been awarded contracts in one case to help them with the digital engineering supply chain, and in the second case, work with them on the digital twin and connectivity initiatives for them. Right, so those are some of the wins that we've had outside of the big one that we talked about and we've announced. We continue to see traction in the market for our services in these areas, and we expect further expansion. In the high-tech space, I should mention we got a net new client to work on a B2B cloud-based billing application for them that will be rolled out globally for them. And this is in the communication media segment. And we expect there are other deals that we are pursuing in the segment, along with them being in Semcon and 5G areas that we expect closure on as we move forward.
Well, wish you best for that. You also saw not just growth, but profitable growth because EBIT margins expanded, I believe, in part due to internal capabilities, utilizations, etc. Is it also a factor of pricing, if you will? And how do you see the margins move ahead? Because I think one assumption that is baked in is, and I take a leaf out of the answer that you gave about the report that you mentioned as well, that if you see organic growth northwards of 15-16%, if you do that, is because of the cost structures that you have, your margins, never mind what they are right now, improved as they are, could actually move up over the next 2 years as well from where they are.
So number one, I mean, very rightly said, Niraj, from a margin standpoint, number one, our utilization in the current quarter has gone up to 77.5%. We do see the utilization can further expand a little bit, so we have some headroom there. Number 2, as far as our offshore split is concerned, we are at about 57% offshore now. You can safely assume in the engineering business, which is very different from IT, anything between 57 and 60 is a good percentage to have, right? Number 2. Number 3 is that we continue to expand in areas of digital. We've invested in labs in our own intellectual property, so we expect some of that to start paying off for us. So overall, we have said quarter 4 will come back to quarter 4 of last year. Last year, quarter 4 was 16+%. So we have already said that we'll get back to quarter 4. This year we'll be back to quarter 4 of next year. And beyond that, of course, we'll have to continue to work hard to deliver to market expectations.
But just wondering if the growth indeed stays strong, which maybe you kind of expect, even though you may not give a formal guidance about it, is it safe to assume that, and rightly so, but I'm just saying because it's an uncertain world, but if the growth stays strong, would you reckon that there is a natural tailwind to the operational metrics as well on all counts?
Yes. there definitely will be an improvement.
Okay. One small, I'm not saying it's an issue, but I'm just asking you, one small aberration, if you will, was that rest of world in Q3 didn't show the kind of growth that some of the other specific designated areas showed. Any reason for that? Could that improve, or would that continue to remain patchy?
So actually, thank you for asking that. In fact, the way we account it, a global customer, if it stops work in one region but does it in another region, we count it as a negative and a positive. So that's how we see it. One. Second, this is trailing months average and not the current quarter alone. So there has been no client situations. What we had for COVID is beyond and past us in Q1. So there's no regional issue as such in any given region at this stage.
One last question, and I'm just trying to understand from you, what is the most exciting thing that happened in the last 3 to 6 odd months? I was speaking to, for example, Sanjay Jalona of LTI, and he was saying that they took a client out of they took a vertical out of an existing company, they separated it and got it digitally ready and up to market in flat 9 months, and which was a standout feature for him in the last 2 quarters. What was it for you? Something that really stood out for you in internal or external?
So one, what stood out for us internally, if I may, was the spirit of the LTTS team of being able to get up and stand up and run again. You know, after India won the match yesterday, somebody actually posted a picture of them all out and then winning, and they said, we learn, we get inspired from every bounce back, right? So I should commend, compliment, thank, be proud of the fact that the team LTTS stood together in the times that we went through. So that was number one. Number two, the kind of work we've seen with people now coming back to work and being able to deliver to clients seamlessly. See, engineering, you are actually supporting plants, you're supporting operations, and we have not missed a single deliverable. We haven't missed a single heartbeat on any of the deliveries that we have done for our clients. So that has stood out for us. Outside of that has been this large $100 million win that we have had. This gives us the confidence in ourselves that we will be able to do it yet again. May have been the first time, will not be the last time. So I believe that these three for us have been really, really outstanding over the last few months.
Inshallah, as they say, may it continue. But congratulations on the good work, Amit. Thanks so much for joining in, and stay safe.
Thank you so much. Appreciate it. Thank you so much.
Yeah, viewers, thanks for tuning in to this broadcast.